Everyone's thinking, are we going to have a stock market crash? Is this some impending gloom and doom? And should you liquidate all your stock and sell if you think the stock market's going to crash? No, that is absolutely the worst thing you can do. It's what's called panic selling, right? And so panic selling is essentially being overly spooked, most often caused by what's going on in the media on the inflation numbers or the unemployment rate or what's going to happen with the upcoming election. Stocks are going to tank and you're going to lose all your money. Well, over the history and since the inception of the stock market, we've had several bear or down cycles of anywhere from 9 months or greater. But those bear markets, aka those down markets where the stock market's going down, have always been followed by very prosperous and great years of stocks going up in price and business doing exceptionally well for 4 years or more. Now, I got to remind you, there have been some within the past, I guess, 50 years in which we've seen good examples of this putting into play, right? So, for example, 2008, the stock markets took 50% downturn, right? So they just essentially lost 50% of the value, but within 2 years, they fully recovered. And if you can remember what happened in the pandemic, the COVID pandemic, within 6 months of that happening, I think that was in February 2020, the Dow Jones Industrial lost over 30 to 35% of its value. But then the markets recovered within 6 months. So what I'm telling you is that panic selling or selling all your stock or a significant portion of your stock for the sake of you're worried or you emotionally cannot handle the volatility of the markets is not a good play. And in the long run, you'll end up losing more, way more than you're investing. If you were to just wait it out and hold on for 6 months, 12 months, a year or 2 years, you will see a great increase in your initial investment and a great return. Now, if you're in a situation where you don't have emergency funds saved up, and this is kind of typically recommended that before you even get in the markets, you have 6 to 12 months of emergency funds that you can live off tucked away. If you don't even have that and you're seriously considered that the markets are going to take a big dump and you're just going to be very decimated and not in a good position, you may want to take or sell a portion of that. If you need the cash immediately, if it's such a situation where you have no other alternatives but to do that, then I would recommend that. But overall, no. Do not give in to panic selling. Do not give in to the media hype. This is just a temporary setback. We're going to see the markets increase to astronomical heights. And if you just wait it out and just stay in there, you'll do well. One recommendation that I have, I had an earlier video of this on my YouTube channel, is what they call dollar cost averaging, which is essentially you're putting money into the market, a set amount, like you're committing $500 per month or $1,000 per month, whatever the amount is, you're committing that amount on a monthly basis. You're not trying to time the market to see if the stock or fund or whatever you're investing is going up or down. You're just committing that, right? And dollar cost averaging is a good winning strategy if you're in the stock markets for long term. Being in the stock markets for long term is probably the best bet because you're not looking to turn over a quick profit. You're going to be able to avoid the capital gains taxes, the short-term capital gains tax, which is a lot higher than if you were to just wait it out for over a year. So there are a lot of benefits to doing that. So whether there is going to be a stock market crash or not, which I don't think it is, don't panic sell. Stay in the markets. As history has proven time and time again, this is just temporary, or this is just being a part of an investor in the markets. It's a contract you sign essentially when you become an investor in the markets. Volatility, it's part of the risk reward game that you have initiated when you start investing. Anyways, thanks so much. Don't forget to subscribe. I wish you good health, and I will see you on the next video. Thanks so much.